I'm Blaine Anderson with BANDER Wealth Management. As we move into 2026, I want to take just a couple of minutes and reflect on this past year, as well as highlight some important lessons. Plus, share how we're positioning clients for the year ahead while we wind down this calendar year. Our focus continues to be tax-smart wealth management, helping you grow and protect your assets efficiently while keeping more of what you earn. Let's look back at 2025 for a quick reminder. It reminded us of some core truths. Markets move up and markets move down, but staying invested matters most. Headlines and expert predictions grab attention, but long-term, tax-smart wealth strategies create lasting results. And patience, perspective, and consistent planning are key. Here's what history has taught us. Market pullbacks are normal. Small dips happen several times per year. Larger corrections happen every few years. But even during pullbacks, tax-smart wealth planning helps preserve and grow assets. Strategically placing those assets in taxable versus tax-advantaged accounts is one way. Timing of withdrawals can efficiently help minimize tax impact. Another managing factor is the distribution of your assets and helping to reduce unnecessary taxes. We like to implement a withdrawal strategy as part of your wealth management strategy. Now, as we look forward to 2026, we know that there will be opportunities as well as existing uncertainties. Economic, political, and global events may cause short-term market swings. But I'll remind you, a tax-smart long-term perspective helps manage those risks. Recently, the Federal Reserve cut the key interest rate by 0.25%, citing rising risks to employment. Now, while this was expected, clients often ask what this means for their investments, their income planning, and taxes. Well, Chairman Jerome Powell described this as a risk management cut, balancing inflation and employment. So here are some key points from the Fed update. On the employment front, job gains have slowed and downside risks have risen. Inflation is still a concern, but the Fed is resuming a gradual rate cut process. So let's look at the forecast. Faster economic growth is expected to close out 2025. Slightly lower unemployment is the forecast for 2026. The Fed signaled 2 more cut rates by the end of 2025. However, analysts keyed in on the possibility of only 1 cut projected for 2026. From the tax-smart angle, lower rates may affect interest-bearing investments, but strategically timing withdrawals, realizing gains, and rebalancing portfolios can reduce the taxable impact. By thinking ahead, we help clients capture opportunities while minimizing taxes and maintaining steady long-term growth. At BANDER Wealth Management, our approach focuses on diversification, income alignment, and then sticking with the plan, all while looking through a tax-smart lens. Here's an example from this year. In April, the market experienced a significant pullback and headlines focused on tariffs, and there was a lot of uncertainty. But despite this volatility, all of our existing BANDER custom income notes stayed within their buffers and made their monthly interest and coupon payments. This is exactly why we include these types of investments in our actively managed portfolios. We feel that they provide enhanced risk-adjusted returns, that they provide consistent income even during short-term volatility, and they preserve wealth without sacrificing tax efficiency. When it comes to portfolio structure, diversification is key, with broad allocation across U.S. large cap, international equities, sector-specific ETFs, and other risk-adjusted categories. Income alignment matches cash flow to your upcoming expenses while considering the after-tax efficiency. And we stick with the plan by selecting the model portfolio that fits your goals and risk tolerance. For example, our Model 1 is our conservative approach. Our Model 6 is our most aggressive approach. We will discuss which allocation is best for you and your individual situation. A growth portfolio includes U.S. large cap and international stocks, while an income portfolio includes bond funds, income notes, short-term ETFs, and other non-correlated investments. We also use tax-smart strategies across your portfolio. Together, we will select investments with favorable tax treatment, harvest losses strategically, and one-time distributions to reduce the taxable impact on your overall portfolio. Your portfolio is one piece of a larger plan. As a certified financial planner, I focus on 5 key areas: investments, being aware of the growth strategies and your overall risk tolerance; income, making efficient withdrawals and cash flow planning, and including resilient income instruments that are in line with your spending goals and capacity; taxes, we plan together to reduce your liabilities and minimize after-tax returns. It is very helpful for us to receive a copy of last year's tax return so that we can provide a tax observation analysis from a certified financial planning perspective. And then estate planning. We want to help preserve your wealth for your heirs and do so efficiently. These are all key pillars that we will discuss during our next appointment and our strategic financial planning sessions with you. And lastly, we will touch on some of the insurance planning or risk management to help protect your assets in a cost-effective way. During your upcoming meeting, we will review these pillars and adjust your specific plan as needed. To summarize, 2025 reminded us that patience, perspective, and tax-smart planning are critical. Looking ahead, we feel that 2026 brings opportunities and, of course, challenges, but our strategies are built to handle both while optimizing after-tax outcomes. We know that the best investment is the one you can stick with, and the best plan grows and protects wealth efficiently. We look forward to connecting in your next strategic financial planning meeting and helping you to make informed, tax-smart decisions for your financial future. If you have any questions in advance, please let us know. We will be prepared to discuss opportunities as well as your questions. Thank you.